Hello all, and welcome to another video from Vize Finance. Today, we will be discussing why credit cards can be a very powerful thing to own. Let's get some background on why credit cards exist in the first place. The idea of credit has been around for thousands of years. In fact, 5,000 years ago, ancient Mesopotamia utilized the concept of credit. Evidence of this are found on the clay tablets from that time period that show a record of transactions between Mesopotamian and neighboring merchants from Harappa. Fast forward thousands of years later, American Express developed its first charge card in 1958, allowing customers to pay their bill monthly in exchange for an annual fee. Now, how does all of this work? Well, when using credit to make a purchase, there's a brief back and forth conversation between your card's issuing bank and the merchant's bank in a matter of seconds. During this time, it is determined if you have enough credit left on your card to complete the transaction. Luckily, with today's technology, this exchange is encrypted, making it very difficult for sophisticated scammers to access your credit card information. Now, what makes these things so powerful? Well, the reason being is credit cards are one of the most effective credit building tools out there. Your credit card issuer reports your account information to the major credit bureaus on a monthly basis. Paying the credit card in full and on time is considered a positive thing. With the ability to make full payments, you also get a decent amount of security. Most credit card companies offer zero liability protection on unauthorized charges if you report the charges within 30 days. Oftentimes, credit card companies will monitor suspicious activity and they will notify you if something seems out of the ordinary on your account. A deal breaker for credit cards are rewards and cash back after purchases as well. Additionally, some credit cards offer welcome bonuses that provide a lump sum of points. A proven to work strategy should be applied when using a credit card. Unfortunately, most deal with numerous pitfalls caused by misuse or lack of understanding early on, such as the consequences of carrying a balance. When you carry a balance into the next month, you're subject to higher interest rates and other fees, which can create a snowballing effect, and if not dealt with early on, it could become unmanageable. The best way to avoid this is by simply paying off the balance in full. It's common for people to easily fall into debt because the money within your credit limit is always available at your leisure. Despite credit cards being a great safety net and great for earning rewards, it's important to treat it like cash on hand. If you swipe your credit card and don't have the funds to immediately pay off the balance, it's likely not worth it. The best way to combat this issue is by establishing a budget. A budget will allow you to spend within your means and give you a good idea of how many credit cards you actually need. A common issue is a person opening up another credit card to pay off the balance of another credit card. Not only does that put you at risk of compounding the debt, but it can further negatively impact your credit score due to hard inquiries. While having a handful of credit cards is not a bad thing per se, as long as you keep your credit utilization under 30%, you may not have any issues. Credit cards are a great tool for leverage and saving money, but without discipline and a strategic plan behind the use, financial turmoil is almost a guarantee. Spend well, my friends. Please like and subscribe.